All right, everybody. Good morning. Let's get started. Week 7, Foundations of Real Estate Investing. Uh, Before I get into it, I want to preface the class just by saying the goal of this class is for you to come up with real estate investment goals that are realistic for your foreseeable future, because it's not realistic for everybody to say, oh, I'm going to have $500,000 to buy a piece of real estate, in the next few years. And that's what I'm going to do. That's not the position that most of us are in. So hopefully by the end of class, you'll have an idea of what your goals are around real estate investing, feasible goals. And I'm going to give everybody some options for how to make money from real estate investing without necessarily needing to buy the real estate yourself. And that is all about real estate investment trusts. So investing in mutual funds that buy up real estate assets. And as they make money, they make payouts to their shareholders, which would be you and me. So that's going to be the focus of the majority of class today. And then I will get into sort of the pros and cons, the risks and rewards of buying actual pieces of commercial real estate, given your options for who you can rent to and the type of lease that you can enter into, because the type of lease is crucial to your being able to make as much money as you would imagine from real estate investing. All right, let's go. What is the most common way people make passive income from real estate? So people that you know in your life, what is the most common way that you've seen people do it? You can respond in the chat or you can unmute. It's totally up to you guys. But what's the most common way people make money from real estate?
Rental property.
Rental, rent out rooms. And are you talking about rental like residential rental?
Yes.
Yeah, I think that's what Patricia's talking about too.
Yeah. Yes.
And that's most common, right? My family did that. My parents have their own business. They saved up for decades and decades and bought, a little shitty house in a really crummy neighborhood. And they're renting it out and making a little bit of income every month from that. But it was like the totality of their savings, was everything that they'd saved up from decades of working. And that's what most people do, right? Maybe they own the house they live in. My parents actually don't. They rent still. They'll own the house they live in, buy a second property and rent it out, or they'll continue to rent, buy a property and rent it out so that they have some income coming in every month, and maybe they can retire on that. Jamie says her grandfather invests in event and commercial space. So Jamie's grandfather's ahead of the game. I wish he was, Jamie, I'm glad you have somebody like that in your life, because you can ask for advice, and I'm sure he would be really excited to hear that you're learning about real estate investment, given that that's what he's doing. But for most people, that's what we see, right? We think about, okay, I want to make money from real estate. Maybe I'll buy a house for myself, and then I'll buy a second house and I'll rent it out. And there's nothing wrong with that. I'm just here to say that there are other options that are probably more lucrative. And when you get into residential real estate, there's a lot of unforeseen expenses. So I'm here to give you guys some additional options. First way that you can start profiting from real estate today, if you have the money, maybe $100, whatever you got budgeted for investing in stocks, you can buy shares in real estate investment trusts. So real estate investment trusts, they're just like ETFs, right? They're groups of investors working in a building together, or in this case, working remotely, and they get certified to buy up real estate And then whatever the returns are from the real estate that they buy or the real estate financial products that they buy, they share it with you, the shareholder. So real estate investment trusts are a way you can start profiting from the real estate market without needing to own the buildings yourself. And this is the kind of investment that you want to hold on to for a long period of time. You could day trade real estate investment trust, meaning buy and sell your shares, to try to make micro profits. That's always possible. But the most stable way to make money from real estate, the easiest and most stable way, is to invest in real estate trusts and hold it. Keep it there, make it part of your investment retirement account, part of your 401k, make it part of your portfolio and your savings for later periods in your life. And there's several different kinds of real estate investment trusts. I'll get into the ones that I think are the best idea given what's going on in the world right now and the way things are looking. But the basic idea of all of them is the same and exemplified by this graphic here. So the investors invest in the shares, they acquire the asset, which could be a building or another type of financial product based on real estate. Then they receive rental income or interest payments and then distribute back to you. And you're part of the investor pool, right? Because it's your money that's helping the real estate investment trust managers, operators to buy the assets. Any questions about how real estate investment trusts work before I move on?
Is it possible to do a small real estate investment trust with like 10 people and each of their investments is really large? So it's like a private fund instead of something that everybody could buy into?
Yes, it is.
Or is that called something different?
No, you can, you could start a real estate investment trust yourself and crowdfund a piece of real estate. That's completely possible. The only difference is it's the investment isn't FDIC insured. So if things go belly up, if you lose the money, you're on the hook for it. The real estate investment trusts that trade on the stock market, they're insured. So that's the only we could start our own trust today, and that's actually a really cool thing. A lot of people are doing that. You can, if you want to make money from commercial real estate, but you don't have $500,000, maybe you have $50,000, and there's a few other people who have $50,000. You can pool your resources to buy a property together, and
Can I ask you? And so that type of thing where you would have 4 people with $50,000 apiece. Would that go towards like investing and then you still get a bank loan for the thing? And so it's like a legal arrangement, but you still have a bank loan for the property? Or is a REIT paying for the property directly and it doesn't have the bank loan?
The bank is not involved. Traditionally, the bank is not involved. I'm sure there are a million different iterations out there, right? This is America. It's like the financial Wild West. There's no rules essentially, but most of the time the real estate investment trust functions like a bank. So they use the money from investors to buy the assets, or they have the capital to buy it themselves and then just continue taking on more investment money to increase the diversity of their portfolio. Okay, so just some facts about real estate investment trusts. I used to think that all the property I saw when I walked down the street or was in a major city was owned by people or by families. But it's getting to the point now where the majority of real estate in the United States that is turning high profits is owned by real estate trusts. So owned by groups of investors who are trying to maximize profits to give payouts to me and you, people who buy shares in their trusts. There are hundreds of different types of real estate investment trusts, and they own about $3 trillion in real estate. When I say here public, non-listed, and private, what I'm talking about is whether or not they're traded on the stock market, whether you can go into Robinhood or E-Trade, type in, the name of the trust, and it pops up. And what that means is that when you invest with them, it's insured by the government. Not saying you can't lose your investment. It's just saying that the real estate trust is vetted by the government. And if the trust goes completely belly up, there is a protocol in place for restoring their investment, like what happened with the, too big to fail in 2008, because it's insured by the government. It's your investment is ultimately protected. So that's what it means if it's publicly traded, sort of like anything else. If we have a huge economic disaster like we did, the government will step in and restore capital to the real estate investment trust or to the corporations on the stock market, to make sure that the market can bounce back. If it's a non-listed real estate investment trust or a private real estate investment trust, you don't have any kind of government protocol that's possible for stepping in the worst case scenario. So it's also important to focus on these last few bullet points here, which are basically telling you that the likelihood you will make money over time by investing in a real estate investment trust is very high compared to other types of stocks you could buy on the stock market. So investing with a real estate investment trust, as opposed to buying a bunch of stock in one corporation or another retail corporation or whatever, a tech company, the returns from real estate investment trusts have been very high over the last 30 years. So if you're looking for a long-term investment that is highly likely to make you money as part of your retirement portfolio, investing in a REIT has historically been a very good idea. Now, some things are changing because of the advent of the internet, and I will get into that. So returns from residential real estate going forward and commercial real estate going forward may not be, or are less likely to be, what they were in the past, because there's less demand for those spaces. And I'll get into that in a second. Okay, types of real estate investment trusts. So 90% of real estate investment trusts are called ERITs, or equity REITs. They own income producing real estate and receive rent. So they will actually buy up buildings, right? They pool investment money from you and me and whatever capital that they started the trust with, and they buy up actual buildings, whether it's land or factories or apartment complexes or a bunch of tract homes or whatever it is, or random homes in different places, whatever they're doing. Then there are mortgage REITs, MREITs, which function kind of like a bank. They lend money for others to buy real estate or real estate / mortgage-backed securities, and then receive interest payments. That is a type of investing I'm not going to focus on so much because it's highly unstable. These are the type of products that helped to crash the global economy in 2008, and they're still largely unregulated. So I don't really like to mess with that. If you'd like to learn more, we could have a private conversation and talk about the nuances of it, but I don't really trust mortgage REITs. Fortunately, most REITs are just equity REITs. They own the income producing asset and receive the rent, and then they distribute the rent to all the investors, which would include you if you're invested in that REIT. So let's check out this graphic in the middle. These are the different types of E-REITs or equity REITs that are typically available. So you have trusts that buy up office buildings, commercial property and retail property are often sort of interchangeable terms. So sometimes people consider commercial property just to mean office buildings. Sometimes commercial and retail are lumped in together. When I say commercial, personally, I'm talking about office buildings, and I'm talking about business spaces of any kind, so retail spaces as well. You have residential, of course, which are whatever, just apartments or houses. Industrial REITs, warehouses, data centers. Could everyone go on mute for a minute? Thank you. Healthcare REITs, so they buy up, like you would guess, hospitals, clinics, etc. Hospitality, hotels. I think Airbnb properties, even though they're considered residential, in some cases can be coded in the tax code as hospitality spaces. E-REITs can also buy things like cell towers, a bunch of residential spaces specifically for student housing. That's a different tax code than just buying up regular residential buildings. Timberlands, so big tracts of land with lots of trees that are used for construction. And farmland. There are all kinds of REITs out there. So whatever type of property you think is going to be giving you the highest returns, considering what's going on in the world right now and the way things are going, looking into the future, there's probably a REIT for that. If you're like, yeah, cell towers, that's a really good idea. Or timberlands, holy crap, there's so many countries around the world that are industrializing and continuing to build, thinking about some place like India where it's just construction as the economy grows. Whatever you want to get into, there's a REIT for that. Essentially, there's a REIT for that. So just taking a look at what your options are, what I'm presenting to you here, which type of equity REIT do you think are most likely to be profitable in the future? Taking a look at this, what are you most interested in? What do you think is going to become an increasingly in-demand type of property?
Maybe industrial, because of everybody moving away from retail spaces and like things like Amazon blowing up.
100%. Yeah, absolutely. Industrial REITs are the future. There is going to be less and less need for retail space, and definitely less and less need for commercial space, as this graphic is defining it. I mean, office buildings are sitting empty right now because of the pandemic. And even afterwards, there are a lot of companies that are realizing they can function entirely without having physical office space and let all their employees work from home. So the traditional, I own commercial real estate. I own space that's coded either as office space or as retail space. And I rent to drugstores, which is pretty much the only type of business I can imagine still needing to exist, even though I read about Amazon starting its own pharmaceutical company, and I had a mini panic attack. So we'll see what happens. But yes, industrial real estate going forward. Residential is, people are always going to need places to live. But what we're seeing right now is so many people needing low income housing that you actually have this glut of empty homes and empty apartment spaces out there right now because people cannot afford to live there. And you have all of these sort of higher cost, fancier homes that are sitting empty because we have a dwindling middle class in this country and people can't afford it. And banks are wary of giving people the kinds of loans to buy those properties that they used to. So residential REITs, people will always need places to live, but you really have to look at where those REITs are buying property. If they're buying up low income buildings, you want to get into the slumlord game. Smart thing to do, because more and more people, we're becoming we have already become a drastically unequal country And that just means that you're going to have more and more and more people who need low-cost housing. So REITs that buy up property that can be used for low-income housing, that's probably a good investment. REITs that are investing in, tract homes that cost $1 million a piece, they are going to be struggling going forward because not a lot of millennials can afford that, and baby boomers are dying off in the next 10 to 15 years. Healthcare REITs, that's something I've been thinking a lot about. It's hard to say because we do have an aging population. So it's sort of like we have an aging population with the baby boomer generation. I would say healthcare REITs are going to reach their peak in the next 10 years and then gradually start to crash because we're going to, generation X, the generation after the baby boomers, they're much smaller as a generation and poorer as a generation than baby boomers are. So we'll see. But right now, I would say the instinct of industrial REITs is the way to go. Also, cell towers and timberlands and farmland. Great idea. People need to eat. Lots of timber needed for construction. Student housing, I think there's going to be more online classes, less need for student housing in the US, but not in other countries. There are a lot of countries out there that are still in the process of industrializing, where they have major urban centers with lots of economic activity, and then rural, vast, millions of miles of rural life that is quickly industrializing and growing.
Clarity, is there a such thing as like international real estate REITs? Like, would you buy property in like Costa Rica or something like that? Are there clubs that do that? I mean, not clubs, but trusts that do that?
Yes, absolutely. They just trade on a different market. They would just trade on the stock market for that country. And you can find, but you can look that up on E-Trade, or you can look that up. And there's no restriction for a lot of the REITs that buy American property also buy internationally. There's nothing stopping them. So it's all globalized. It's pretty much all globalized now. Let's look at the total return for REITs by segment in 2019. So this is pre-pandemic, right? Pre-pandemic. So for all of 2019, the highest returns came from industrial. And that instinct, Julia, was smart. Industrial real estate, highest returns, data centers, timber, infrastructure. So infrastructure is like roads and bridges and any kind of changes made to the land to make it suitable for whatever purpose. So anytime there's major construction happening on land to build it up to create a city or to create whatever is gonna occur there. Offices, pew, that's gone down a lot in the last year because of the pandemic, of course. But you really want to stay in, and I'm sure somebody had the thought of, okay, well, what if I diversify? What if I invest in a REIT that's everything combined? The returns are not as high as you might like to see. So sticking in this range here, industrial, data centers, timber, infrastructure. Those REITs are going to continue to show the most robust long-term returns. And they're less susceptible to fluctuations in economic growth. So if the US goes through another economic crash and you see more poor people, more homeless people, more people who are just in desperate financial situations, because of the way our economy is set up and how impervious corporations are to failure because of government assistance, corporate welfare, you really are never going to see any drastic declines in industrial, data center, timber, infrastructure. especially if you're looking globally. So stay in this group here. Stay in this group here. Office, residential, I think you're going to see all this continue to decline if we're looking at longer term trends for 5 years, 10 years. Industrial, data centers, timber, infrastructure, stay there. Okay, so moving outside of real estate trusts, if you are willing to commit to a dedicated savings period, and what I mean by that, you know, it depends on how much you're starting with, but for most people, it's a 10 to 20 year period of saving so that you can buy a physical piece of property, whether it's by yourself or with a few friends in a trust. And I like that you brought that up, Patricia, at the beginning, because let's say if everybody here wanted to go in on a piece of real estate together, we would still see good returns. Of course, they wouldn't be as high as if we owned it by ourselves, but we also could start making money a lot earlier because we could buy the property earlier. So pooling your money and sort of crowdfunding a piece of real estate is totally possible. And don't count that out. So yes, you could save up all by yourself for a decade or more and put a nice down payment on a piece of industrial real estate, for example, or a retail space, but it's going to take some time. It's a lengthy, extended sacrifice period. And that was my 20s, essentially, my late teens and early 20s, mid 20s. That was my sacrifice period where I was just dedicating all of my savings to be able to buy real estate. And just to be completely honest, it takes a total shift in the way that you live. You're not getting your hair done. You are living in the cheapest place you can imagine. You're not traveling. You are kind of miserable. I mean, I was not doing anything fun for like 10 years so that I could buy a piece of real estate. And it's really a sacrifice. It's really, really hard. So if you're going to make that sacrifice, I want to be very clear with everybody on the potential returns, because I see people saving and buying an investment property, which is usually just another house that they can rent out. And the returns they make are so low. And here is why. So there is something called a net lease, NNN. And a net lease is a contract where the tenant, the person renting out the property or the company renting out the property, pays the property taxes, pays the insurance on the building, and pays for the upkeep, and pays for any kind of policy effects. So in other words, if the government suddenly says, you need to retrofit this building and we did an inspection and you need to change this and this and this and this and this, it's the tenant who is on the hook for those expenses. And you're saying, well, why would a tenant ever agree to that? That sounds crazy. It's because they get a reduction in rent, and all of those expenses, like the property taxes and the insurance and the upkeep, are tax deductible for them. So for big corporations, it actually makes sense. They save money and you save money as the landlord. But that type of lease is not possible with residential real estate. You are never going to convince somebody renting out your house to pay your property taxes and your insurance. That's not going to happen. Or fix, a broken pipe or electrical issues, or make your house wheelchair accessible or whatever. That's just not going to happen. So because of all these expenses falling on you as the landlord, as the property owner, I would advise against residential real estate as an investment, because it's really expensive and people don't make nearly as much money as they think because of taxes and insurance and upkeep. It's a lot. It's a lot to make I see people do it all the time. They make tremendous sacrifices, like my parents, tremendous sacrifices, scrimping and saving, living in like public housing and devoting every dollar that they made, right, to saving and buying this other house. They're renting it out and they're barely making anything because they have so many expenses. Commercial, industrial, and land, if you buy those types of real estate, a net lease is possible. So you're on the hook for income taxes, but that's pretty much it. If you buy land, there are a lot of construction costs that some people don't think about. It's not just like, okay, let's say you buy up a bunch of land and then you want to give permission to whatever corporation to build properties there, to build housing there, to build retail spaces, industrial factories, whatever. You want to say, okay, Amazon, I own all this land over here. You want to build a big factory here, a big warehouse here? You need electricity, you need cell tower to be nearby, you need to irrigate it. Land that's a rich person's investment. If you are buying land for the purpose of putting functioning buildings there, it takes a lot of construction cost up front. Even if you're going to use it for farmland or whatever it is, there's a lot of construction costs up front. You have the highest potential returns post expenses, but it's sort of like you need to be balling already to make land turn a profit. So in the commercial and industrial zone here, net is possible. Your only expenses, if you sign that net lease, are going to be income taxes. So of course you have to pay your own income taxes, which leaves you with so much money because you're not, it's great, you guys. I don't pay property taxes on the buildings that I own. I don't pay insurance. I don't pay upkeep. Whenever there's I just had this situation where we needed to change all the everything about the facade of one of my buildings. So it was like a $200,000 expense, to make it wheelchair accessible, and my tenant had to pay that. I didn't have to pay. So it's really a smarter idea to buy commercial or industrial. And like we've been talking about, commercial real estate is getting to be riskier and riskier. So if I were going to give you any one piece of advice in terms of what your goal should be, it would be buying a piece of industrial real estate. Buying a piece of industrial real estate, renting it out to something like Amazon or a major corporation, so they could use it as their distribution center, so they could use it for manufacturing. Most likely it would be just a distribution center because our manufacturing is done overseas. But that's sort of the sweet zone right now. These industrial real estate spaces are in demand going forward. You can enter into a net lease with the tenant. It's good for them and good for you, because even though they're paying all this stuff, it's a giant tax write-off for them. So they want to show those high expenses so they can claim as little income as possible. And this is the sweet zone. I own 2 pieces of commercial real estate and I'm worried about it. I'm renting out to drugstores right now, which I think is viable for the next couple of decades. But after that, I'm not sure. The future of commercial real estate is kind of much less certain, certainly, than it used to be. So when you're imagining yourself making money from real estate, I really hope that after this class, you'll imagine yourself doing something other than buying 2 houses and renting one out. Because, even beyond the expenses, look at what's happening to people right now. They can't afford their rent. They can't do it. And there's rent freezes and eviction freezes. And if you are a landlord, you're up shit creek without a paddle. Because if you own residential real estate, you still got to pay your taxes this year. You still got to pay for your insurance. You still got to pay for upkeep and any changes that need to be made to the building in keeping with policy. But you're not getting any rent because your tenants are broke. And the government recognizes that and is saying, well, you can't evict people. So you just got to keep your tenant who's not paying rent. And you're, as the landlord, as the property owner, you're fucked. So it's really, I would, unless you have a really great opportunity or you're inheriting the property, I would stay away from residential investment. That would be my personal advice, because it's just, talk to any landlord right now who is renting out a residential space, and most likely the tenant is very behind on rent and they have so many expenses that it's really not giving them any returns at all. A lot of people are actually going into the red because they have saved up money to buy a second piece of residential property. And that didn't used to be the case, but we have a middle class that is shrinking and shrinking and shrinking and shrinking. People are poor. They cannot afford to rent out your nice house. And that's the way things are going right now. Any questions about this chart? About the net lease, the expenses, the investment returns, anything I can clarify?
Clarity, I put in 2 things in the chat about
Oh, sorry, I didn't see.
no, just 2 questions, but they were back when you were talking about the chart. So if you want me to repeat them,
I got them. Okay, so Patricia asks, what about multifamily owner occupied? That's smart. That's smart. If you're gonna live there, that's gonna save you money over time, of course. If you're not gonna live there, but here's the thing. Even if I think you'd be better off having your own place that you live, and then renting out a type of space other than residential. Because let's say you have an apartment building with 8 units and you live in one of them. 6 of those tenants are not, they can't afford their rent, and you're still on the hook for all those expenses. You do have some tax breaks because you live there, but it's scary. I mean, I look at the desperate situation so many people are in right now, and the rent freeze is going on all over the country. I don't think it's the final time something like this is going to happen. So I don't know. It scares me. And then Patricia asked, how do you shop for your buildings? So I love reading about different up and coming areas in the country. LoopNet is definitely cool. If you guys want to check out LoopNet, it's basically just gives you the rundown on pricing and growth and activity in different areas. And that's super cool. Patricia also asked, if you look at buying a business, should you buy the real estate it sits on? If you can, that would be super awesome. So if you buy a business, like let's say you buy a restaurant, it's definitely better if you can buy the building it's in, but good luck. It depends on whether the landlord will sell it to you. That depends. But yeah, of course, if you can buy the property it sits on, that's the way to go. That's the way to go. Let's move forward. Okay, so the concept of buy low, sell high, of course, extends to choosing a property. Patricia, your question's well-timed about, how do you find a spot? Where do you go? So look for a commercial or industrial property that a major corporation would be likely to enter into a net lease for. And this entails basically finding a spot that is in close proximity to a larger city or port and has a growing population. So increasingly what we're seeing is major cities becoming prohibitively expensive for the majority of people. And so they spread out. but people want to stay in close proximity to the city in order to have places to work and things to do. So looking for spots that are, smaller cities who are growing, or towns that are growing, places that are in close proximity to a lot of economic activity and a lot of wealth, but not in those city centers themselves, because pricing of property in city centers is, unless you are coming, right off of an economic crisis, very expensive, and growing population. So LoopNet is a way that you can find out where these places are. What I like to do is just Google, right? Google things like up and coming cities, or places where property values are increasing, or where are a lot of people moving right now. Just doing some research, doing some sort of investigation to figure out what the latest spots are, what states are growing, right? Ohio, a lot of people moving to Ohio, a lot of people moving to Idaho. Wisconsin is on the rise. So there's states where you really could never imagine a lot of economic activity happening in the past, but because major cities are getting so expensive, and the gap between rich and poor, the ratio from rich and poor is widening. So it's very popular now for people to be moving out of larger areas, and even major corporations. Let's take Amazon, the classic example. They're not trying to buy up a bunch of warehouse space in San Francisco. It doesn't make sense for them. They can put up a distribution center 20 miles outside of San Francisco, and it'll be much, much less expensive, much less overhead. They'll have a population willing to work at the warehouse center because it's more of a rural or residential area where they can pull from the population to get workers. So just making sure wherever you're imagining buying property that you're not thinking, I'm going to buy a building in downtown Los Angeles. Like, okay, well, maybe if you've got, Daddy Warbucks on your side, but what you want to look for is growth, a place that is burgeoning, where people are moving there because they can't afford wherever it was they were living before. And that place is still in relatively close proximity to a place where there's economic activity going on. So a city or a port, somewhere where there is employment opportunity. So I want to hear from everybody who's in class right now. What are your current real estate investment goals? What are you thinking of? What are you thinking? When you look into the future and you think about yourself making money from real estate, what's going through your head? What do you want to do?
Ritz for me.
Ritz. Yeah, me too.
For sure.
Me too. So Patricia's thinking about multifamily because she's thinking about a place for her to live, and that's super cool. Owner occupied, yeah, for sure. Maybe I'll move in too if you'll have me. Don't do a background.
I'll have to.
Please, no background checks. So
That works both ways.
hey, girl. So how about everybody else? What are you thinking? What are you guys thinking? What are your goals? What are your goals around real estate right now? What are you thinking about? Well, if you don't know yet, that's okay. But I'm hoping at the very least that your goals are moving beyond owning one house for yourself and then buying a second one and renting it out. There's just too many hidden costs there. And if you're thinking of buying a space that a business can occupy, think about the businesses of the future. Think about the way that businesses are running. I mean, yes, you do have need for cafes and restaurants and little boutiques. People always like to go out and shop and have fun and go out on the town. Definitely. But increasingly what we're seeing is the need for industrial real estate, the need for timberland, the need for, so if you can just think beyond the traditional way you've seen most people make money from real estate, your goals will be smarter. And that's sort of the point. That's the point.
Clarity, I have a quick question about timberland because I'm not familiar with it. That's just pretty much cutting down wood.
Yeah.
Right?
Yeah.
So would that be affected by, like, for instance, Biden is going to be very green. He says he's going to be green and combat global warming. So would that be affected then?
Well, so the idea is like there are big areas of land that are devoted just to timber for construction. So it's not necessarily chopping down, right? That's a good question, right? You're like, wait, am I signing up to like chop down the Amazon rainforest? Right. Just like we did the economic devastation. So there's a green certification process for any REITs that if let's say you're buying up land that has water on it, or you're buying up land that has water on it, or timberland, or trees, or whatever it is that the land has that makes it a valuable asset. It has a product on it that's in demand, whether it's water or wood or whatever. That there is a green certification process. So basically, where the Environmental Protection Agency goes in and says, "Oh, well, this is not destructive for the environment. This is a sustainable way to produce this." What I would trust the EPA under Biden a little bit more than Trump because the EPA right now is a mess. But it's sort of it. You're not going to be cutting down the rainforest if you invest in a timberland REIT. Most likely, unless you're investing in a Brazilian one.
Yeah. Okay, good to know.
Okay. All right, my loves. Let me just review next class. It's our last class, week 8, last class of this semester. I am going to be repeating. If you have any friends or family that you think would really benefit from this course, you can let them know that I'm going to be repeating the class twice more. So I'm going to do a winter semester in starting in late January, and then I'm going to do a spring semester too. So we're going to have 2 more 8-week periods if you have any friends or family that are interested. Next class is about important documents. So wills, trusts, power of attorney, life insurance, prenuptial agreements, just getting into what documents you should have right now to make sure that whatever assets you have are protected. And that's what we're going to get into next week. So low cost ways to create those documents, what you want to make sure is included in them, how to protect yourself, essentially, legally protect yourself. Recording of today's class will be uploaded to YouTube. Previous weeks have been uploaded. Every Sunday class repeats the following Tuesday, and reach out to me if you guys have any questions. If you are going to be attending next week, if you're comfortable, just feel free to share like what stage of life you're at. So I'm going to be asking people, do you have children? Do you have a husband or wife? Do you have what documents are sort of you needing? Because I want to tailor the class around the people that are there and what they have and what they need. So just come prepared to discuss that. I'm going to try to tailor it to your individual needs because there's a lot of documents, but there's some essential things that we all need. And then given the situation that you're in life and what you're preparing for, or worst case scenarios you're preparing for, right? Death, divorce, whatever. I want to be able to give you the advice and the resources you need to make sure you're actively trying to get these documents. Everybody should have life insurance. Everybody should have a will and a trust. If you're getting married, you should have a prenuptial agreement. If you're in a domestic partnership, you should have some sort of similar asset division agreement. So if you have kids, forget about it. You need all of it. So that's for next week. Come with any questions you have, and we'll make sure you're all set up, and that you and your loved ones are protected in the event of bad things, of sad things that we pretty much all can't avoid. So unless you're gonna live forever and be immortal, if you figure it out, let me know so I can avoid it. This life's taken long enough. All right, guys. Patricia says, isn't reforestation part of timber? Yes, exactly. Oh, pet insurance. Yes. Oh my God. I know. I signed Hurley up for that actually yesterday, Patricia. Your cautionary tale. I was like, oh fuck, I gotta insure this dog. All right, everybody. I'm gonna get going. If anyone has additional questions about REITs, or you're looking into you're like, oh, I discovered this real estate investment trust. Clarity, do you think this is a good idea? Or what do you think about this and the stuff that they buy? Just let me know. Send me an email. Shoot me a text if you have my phone number. And I'm happy to counsel you sort of one-on-one or talk it out with you. So, all right, guys. Thank you. I'll see you next week.
Thank you.